Hosts of today's meetings are Mr. Krzysztof Kilian, President and CEO of the company, and Mr. Wojciech Ostrowski, CFO. My name is Przemek Waślewski, I'm Head of Investor Relations. Before we start, short announcement as usual. We are sitting here in front of group of domestic investors and analysts, but there are also people watching us via internet. After short presentation of ours, there will be a possibility to ask questions. We'll try to answer them. If you're sitting in front of us, that's pretty easy. You raise your hand, ask a question, we answer. If you are watching a webcast, you need to send an email or use a special form on the transmission web page. Then we will read out the question and try to answer it. Mr. President.
Good morning, everybody. So let's start. In 2012, we have witnessed dynamic changes in the business world. The electricity market was no exception, as you know. On top of the general economic slowdown affecting the business performance of our sector, we saw an impact of earlier decision of the regulator. The inflow of zero variable cost, for example, cost energy from renewables, which are, by the way, highly subsidized. Also, the future shape of the regulatory framework is blurred. The market wants a predictable and dependable regulatory framework, which would allow the implementation of long-term necessary investment under such conditions that would create value to our shareholders. The slump in the economy resulted in an overall lower demand for electricity, 0.6% drop year on year, and consequently forced prices down. At the same time, renewables moved the conventional plants farther to the right-hand side of the merit order, pushing some less efficient generators out of the market, and thus further negatively impacting the pricing. Finally, low carbon allowance prices further pushed the price down. What are the industry implications? First of all, hard coal generation profitability is under threat, as revenues are covering little over variable costs in many cases. Secondly, less efficient generators are being pushed out of the market, suffering not only from the price, but from the lower volume as well. And thirdly, lower load necessitates tighter control over fixed cost, as this is the only remedy to keep plants competitive edge. So where does PGE find itself in today's world? We are affected by these market conditions, but our asset structure gives us a market advantage. 2012 was the fifth consecutive year of recurring EBITDA growth for PGE. PGE has been able to increase underlying profits since its establishment. This is a very rare quality in the utilities universe. Despite a decrease in the electricity demand in Poland of 0.6%, PGE again outperformed the market with net generation growth of 1%, as well as expanding on the retail sales market again by 1%. Recurring EBITDA margin of 28% positions PGE among most profitable utilities in Europe. It means also very solid cash flows. We remain the least leveraged of large European utilities with net cash positions of 0.4 times EBITDA. Without the need of urgent deleveraging, we have the comfort to focus on value creation. After a recent acquisition of wind assets from Dong and Iberdrola, we will become number one in wind generation in Poland with 269 megawatts of installed capacity. However, these transactions have not yet been closed, as we wait for the approval from the Anti-Monopoly Office. To sum up, we remain an undisputable leader on the Polish market. We have a clear cost advantage over all of our competitors, therefore our revenues and cash flows are sound and stable. And next, our stable financial perspective gives us the comfort to focus on transformation of the group, to be better prepared to face the challenges of the market. Here, allow me to present actions we have already taken to facilitate those risks and goals we are expecting to achieve through these actions. This includes a general revision of the current approach towards long-term planning of value creation, as well as very tangible project of organizational and structural optimization. Here are the most important features of our plan. First, as already announced, we will publish a long-term strategy review. Market conditions, as just described, require an adequate answer. With the strategy update, we aim to achieve long-term value creation. We want to set up the right objectives, which are ambitious but doable, and back them up with the proper execution plan and discipline to enforce it. Second, we are reviewing our investment portfolio. We aim to maximize returns on invested capital, therefore we are very prudent in risk and reward assessments. Third, since June 2012, we have been working on a new operational model of the whole PGE Group. Changing the ways we function will allow for improved execution and squeezing our efficiencies from process-based management. We want stronger integration between our business lines and aim at synergies resulting from centralization of certain management, decision, planning, and analysis functions. We also plan to coordinate the margin management and investment process at the group level. Fourth, we have started with a wide implementation of SAP in the whole group, which will bring management efficiencies such as improved decision-making and increased transparency. This is one of our priorities and is directly linked to the previously mentioned new operational model. Fifth, we have created ICT shared services, which will allow for optimization of technologies and resources employed in this area within the group. This shall improve operational efficiency and information flow, making the group more flexible and easier to manage. Six, in January 2013, we started a new pilot project focused on process efficiency in the Turów complex. There are little variable costs in lignite plants, so decreasing fixed cost per one production unit is key to sustaining our cost leadership and increasing our competitive advantage. It's also a prerequisite for further investment in conventional generation capacities. We have started in Turów, but we will set up similar projects in other locations as well. Above all of this, there are people, and their engagement is a key success factor in carrying out for the transformation in the group, and therefore building a transparent and credible communication culture is our priority as a management board. Let me give you now a short update on our investment program. We are, as you know, engaged in a wide portfolio of different investment projects. Shifting market environment forces us to review those projects on ongoing basis in order to receive an updated investment plan allowing for efficient use of capital. Our main target is to build an investment program that will provide a long-term value maximization. As an input, we take a number of factors: demand, supply expectations, backed by scenario analysis using our own market model. We follow it with risk-reward profile and underlying profitability of each project. We also analyze potential investment interactions. No project can be approved without assessment of its implication on the whole portfolio. We will analyze and lobby for support mechanism should the project require such mechanism to be profitable. We will cease to continue with unprofitable projects unless external support makes their profitability attractive. Projects are analyzed from the environmental footprint perspective and also internal organizational capacity will impact approach towards our investment appetite. Relying on the mentioned analysis, we make decision on what technology solution meets our requirements, is most promising and least risky for the future, and what scale of the projects fits our needs, and what is the most suitable time frame of the project implementation, and what external and internal conditions should be met to commence the investment process. As an outcome, we will deliver an updated investment plan that meets our investment requirements and at the same time offers the best returns on capital deployed. As soon as we complete our analysis, we will share the results with you. I expect it will happen in a few weeks, so it means strategy. Now we'll ask my colleague CFO Wojtek Ostrowski to bring some details, financial details of our previous year. Thank you.
Welcome everybody. It's nice to see you once again. And I think that it's in some cases difficult to add something, but I will try to show you some more figures regarding our results in 2012. On the slide number 7, you see the confirmation what was just mentioned, that the prices of electricity went down, and this decrease is between 15 to 18%. But this is obviously connected with the demand and renewables, but the same connected with the prices on the commodity market and the CO2 prices. As you see, the CO2 prices decreased roughly the same amount as energy prices, and hardcore worldwide decreased much more. From this perspective, it looks that theoretically the gross margin should stay on the same level roughly. But to be frank, in Poland, this decrease on the hardcore prices, it wasn't as big as here, you see, worldwide. It was the same when the prices went up. In Poland, this increase was rather stable, and the same this moment we see the decrease. Therefore, it is probably some problems with the covering of the fixed cost in some less efficient the hardcore plants. On the next slide, you see the information about some macroeconomic data and our operational, and you see that GDP growth 2%, and besides of this growth, this minus 0.6% in the domestic consumption. And additionally, domestic production lower 2%, what is connected with the lower export in comparison to 2011 to Germany and bigger import from Sweden. Besides of this situation on the market, we generated slightly more than 1 year ago, this 1% bigger sales to the final users, and the same in the distribution volume, and much more bigger the wholesale market. from other side, the results, this operational results in Q4 shows that the market is under pressure. On the next slide, you see that this increase of the volumes in 2012 was connected with the lignite production, with this new block. You know about it very well. And from other side, it was decrease of the hard coal production, and this is related to the lower demand, and from other side, the same drop of the prices, and in some cases, it's better buy from the market than produce. And we analyze this situation every day. The combined heat and power plants, some production increased, mostly due to new biomass in Szczecin, what was finalized and commissioned at the end of 2011. The same increase in the renewables, partially by maybe not just partially, but mostly by biomass, co-combustion and dedicated in Szczecin, what just mentioned, and additionally some small increase as well in wind generation because of this acquisition made in September and October, the two wind farms, Pertin and Żuromin, maybe finalization of this acquisition. And this year probably this increase should be higher. Next page you see the financial results of fourth quarter, and you see that recurring sales is close to 2% higher than 1 year ago, mostly due to slightly higher volumes in retail and wholesale sale. And additionally, we see the same, that the recurring EBITDA roughly on the same level as 1 year ago. But in this case, we should say some words about the normal EBITDA, because we can say that recurring is slightly better, but as we can name, normal is absolutely below the year ago. As you know, the situation on the market changed a lot, and the decrease of the prices required some action as well from our side and from accountancy perspective as well. Therefore, we need to do some impairment tests for our assets. And with such prices, it appeared that one of our assets, which we spoke about sometimes with you as well, probably with such a scenario will not bring additional value. Yeah, it is some zero, close to zero effects of this our assets. Therefore, we need to do the impairment for Dolna Odra, and it was almost 1.5 billion. But from other side, the same scenario of prices shows that we should get at the end much more money from the LTCs, because this is the same path of prices. It shows that it was partially offset by this recalculation of LTCs. Additionally, the Polish economy is in so good shape that the bond percentage which should be paid by Polish government in 10 years bond decreased from 5.75% to 4% at the end of 2012, and we need to do the same, the recalculation of the provision for recultivation and actuarial provision as well. And it is almost 900 million in recultivation impact and over 200 million for actuarial provisions. And additionally, that you hear still from the market information about the CCS all over the world, and our subsidiary decided that this project without support is absolutely unprofitable, and therefore they decided to stop it. and therefore we need to do the same, this impairment 156 million for CCS. All of these items are non-cash, but they had the impact to the results. Regarding net profit, you see the same, some figure in red in net profit, but recurring net profit is 7% better than last year. Next slide, 11, you can see some composition and maybe decomposition of our EBITDA in fourth quarter by segments. It is some small decrease in generation, mostly due to management fee paid to wholesale. It means to PGE, because it was some change of the agreement. I talk about it in August this year. The same about this agreement, little bit on such meeting. The same, there's some cost of fuel, and in fourth quarter slightly lower volume than last year. Renewables was higher, and the result is higher because of volumes. Wholesale, this is the opposite situation. This fee paid by generation increased the EBITDA in wholesale. And this is the main reason. And what is for us, I think, that very good, the very good results of distribution, because mainly in fourth quarter, mainly due to higher tariffs and the same cost discipline. This cost discipline, it was the same, the result of the quite good the EBITDA in retail, but the same, the main reason for so good result in fourth quarter in retail, it was the lower cost of certificates. You know about the market condition and where we were with the certificate prices. Next slide, you see the composition of EBITDA in whole year, and the similar situation when we can talk about conventional and wholesale. That in reality we should add both these segments to have the real comparison, because this fee paid by conventional was moved to wholesale. From the renewables perspective, what is I think very good for us is that the volumes had a positive impact, and we hope that thanks to this acquisition last year and hopefully the finalization of acquisition this year, these results in renewables should be better this year as well. Regarding distribution, we had the better tariffs, better volumes, and the quite good discipline in cost that it brings the first time the EBITDA over 2 billion, and this is some the bigger EBITDA than some of our competitors in whole the chain. From the same, the retail, we had, besides of the situation on the market, we had slightly higher volumes sold and slightly better prices, but the same, the impact of certificate, the prices of certificates mainly in fourth quarter. About the key one of items I just mentioned, that I don't want to talk about it once more, but you have little bit detailed explanation what happened and why on the slide 13. On slide 14, we would like to confirm that we have the long-term and sustainable the policy for dividends, that 40-50%. And for 2012, Management Board proposed to pay out the top of the policy range, which is 50%. It means slightly over 1.6 billion Polish zloty, and what gives the 0.86 Polish zloty per share. Proposed date of dividends is 5th of September and payment date 26th of September, but we should remember that the amount of dividends, the same of the dates, will be verified by shareholders meeting, and we will see how it will look like after this. Next slide, this is just the confirmation of our very good financial situation. Still net cash 2.5 billion, lower 1.5 than last year. The payment of last year, the dividends 3.4 billion, it wasn't covered by difference between the operating cash flow, which was close to 7 billion, but we spent the same 4.5 for investment. Therefore, we have a lower net cash than last year, but still, I think that probably just maybe not just one the company in the energy business in Europe, but few of them can have the similar situation. And regarding ratings, the Moody's and Fitch, the Moody's A3, Fitch 3B+, and with the outlook stable, that I think that it is quite good situation for us potentially to go to the market for money if necessary. And last slide, some short information about this efficiency program. You see that voluntary leave programs cost us almost 260 million Polish zloty last year. It was offset by cost initiatives. Some of this was related obviously to lower costs for employment related to this voluntary leave programs. What is negative from this perspective, the revenues initiatives which are in minus, it is some problem with getting the certificates for biomass co-combustion, and to be frank, it is the same some threat for the future because of the new proposals of regulations. It can show that these initiatives could be very difficult to achieve. From other side, these cost initiatives were made slightly better than planned, and I think that what you see, the decrease of the headcount in the group, almost 7% last year, it means 3,000 people, slightly more, that over 9% in conventional generation, distribution 6.4, and retail 8.8. That it is our job, and I think that it will be probably more deeper analysis, and probably we will do a lot of job to verify it once more, but to do this better and not to decrease the initiatives in the nearest month. Thank you very much, and the floor is yours.
Thank you. Now it's time for questions. This time we'll start from the internet viewer questions. First question comes from Fred Barazi of Goldman Sachs. And please, could you give a bit more detail on your investment project reassessment? Is everything up for review, including Opole and Turów? And do this project make economic sense based on current conditions?
Well, we will answer on this question showing our new strategy in a couple of weeks.
Second question, regarding the outage in Q4 and the potential for insurance compensation, do you record that any compensation in Q4 result, and can you quantify the impact?
No, this compensation wasn't recorded, and that this moment is under discussion with insurer. We can just say that we have the 30 days deductible, and it should be paid for additional almost 60 days by insurer. We are talking about tens of millions, not about hundreds of millions.
And third question, what is your expectation for the developments of power prices in Poland over the next few years?
We observe the market and react what's going on the market. So it's very difficult to predict when you look back at the prices prediction from the past. So you see, everybody sees that this is unpredictable. So it's very difficult to. I'm not a witchcraft, I'm not able to tell the currency price and what the price of the energy will be in 2012, in 2020, etc., etc. We observe and properly react what's going on the market.
Thank you, and Robert, please.
Robert, my PGE. Maybe first question regarding the reassessment of the value of Dolna Odra. Can you reveal the prices which you used for revaluation of your portfolio of assets, and whether the new project of Opole makes sense according to your prices of electricity, and what is the risk that we will see further revaluations of your assets? This is the first question. Second question on dividends.
There were three questions.
Yeah, in one. Okay.
In first question it was free.
Okay, so maybe let's start with this.
Regarding the Dolna Odra, the path is we can't reveal, because if we can reveal this, probably it will change not just PGE evaluation but all other companies as well on the
competitors.
Market. We don't want to do this. And regarding Opole, I think that we will talk about it in the nearest future, in the nearest weeks.
In a couple of weeks.
During the strategy presentation.
Yes, because it's strictly related to the strategy, so we present all data about our investment when we show the strategy in a few weeks.
Okay. And regarding the dividend payout, which is pretty low, 0.86, what do you plan to spend the most money in 2013 if you assume such a dividend payout?
So it depends what does that mean, pretty low, because compared to yeah, of course, it's better to be younger, richer, healthier, etc., etc. I understand, but it's better to have something than to have nothing. So compared to the present and situation on the market, we still deliver huge dividend to the market and to the investors. So I don't know what was the expectation. Everybody could expect much more than it is possible to realize, but this is reality. We act in a very changeable and very unpredictable market without stable, low regulations, and with prices going down, unpredictable. So, in our opinion, the dividend is not maybe not expected. How to say? It's good from the point of where we are on the market.
Maybe the last one on electricity prices. You showed on the graphs that the average decrease in the prices last year were between 15 to 18%. So is it right to assume that we would observe such a decrease in your effective price in sales in 2013? Or what would be more justified? What kind of price would be more justified to assume? And is it already, can we talk about contractation for 2014, or is it still too early to talk about prices that you can achieve in next year?
Yeah, I think that regarding prices, obviously, as you know very well, that some of the volumes is sold for in forwards last year. It means the prices were slightly better than this moment are on the market. From other side, that some decrease is visible. It is, I think, that the visible the same in we saw it in fourth quarter as well. because some of the part of the energy is sold on spot. Therefore, it will have the impact, probably not so big as you can see here. From other side, we don't announce the information about how big volumes we sold for next year. We are too big, and really this moment on the market we can say that almost one player, because the rest doesn't have the necessity to be there. Therefore, it will be too open to say amount of the volume sold.
So, adding something, we have very disadvantageous situation with our position on the wholesale market because of our LTC contract. The whole energy produced in our generation company, so it means almost 100%, we are obliged to put through the Towarowa Giełda Energii. So this is a problem for us to realize direct contracts with subcontracts or wholesaler. This is a problem because it's not allowed by the law. So we are the only company left on the market having LTC, except some small companies, but from the large perspective, you are the only company on the market having this problem. 100% through exchange, stock exchange should be sold.
Good morning, still Piotr Zindziorski from Credit Suisse. Thank you for letting me ask a few questions. I just wonder if you could comment on your recent renewable asset acquisition. How does it fit in the framework of uncertain regulatory environment and the outlook for power prices? How can you justify an expense? And can you share the details also of what share of the assets you're buying out of 2 billion zloty? So firstly, how does it fit into the strategy, uncertainty, power outlook, and so on? And second question is, can you please explain to me what's the difference between Dolna Odra and the Opole power plant? How different they are from each other, that you have to make an impairment on one and not another? Do I read it as, Dolna Odra probably runs as support the system, load factors are okay. Can you please explain to me why you make a write-down on one or another? And would you say your write-down basically implies Tauron generation is worth zero, generally hardcore assets in Poland? Is that what you try to say by this impairment?
Okay, that may be the second question. I think that the cost of the production between Opole and Dolna Odra is with the big difference. Firstly, the cost of the transportation of the coal. This is the first. But second, the efficiency of the blocks. The Dolna Odra is older, smaller, and therefore is not so efficient as Opole. The difference in cost is roughly close to 15-17% from the cost perspective. Therefore, this is the issue why Dolna Odra, not Opole. At this moment, we can say that Dolna Odra works just for operator. It's no the sales direct to the market. Opole, it exists normally, obviously in some off-peak, in smaller volume, in peak, roughly normally as it was before. That this is the quite big difference. And from other side, we didn't have any remuneration last year from the additional operator because of additional costs.
Would you consider shutting down Dolna Odra in that case if it makes losses?
So please advise PSC because they are responsible for Krajowy System, National Energy System, and regulator, because regulator has a duty to keep a power plant to work. So it is impossible to shut down any power plant in Poland without permission from regulatory. But because Dolna Odra plays a significant role in a national energy system, So we have to keep this power plant ongoing, despite the economical situation of this company. So, as you know probably, we asked the regulator to help us to maintain this situation, because there is a possibility mentioned in the law that the state, through the regulatory body, could turn back us money if they ask us to deliver some energy for the system. So regulator changed the instruction of I don't know how is it called in English. Network instruction for this company, allowing us to give back some money if they use our power plant to feed national system for something.
Can you then say something about what's the difference in the PGE number contribution of these two plants to your total group figure?
Mówimy?
I wonder, because on Dolna Odra, if you get the revenue from the transmission operator, I would definitely assume some uplift in your numbers.
The next question, please.
It was on the renewable assets acquisition. You know, you have this bearish view on the power prices. I understand, and you have there is no renewable law, and yet you spend 2 billion zloty combined with Energa on acquisition of assets. Why is this the case?
Because we have to do something, despite that there is such environment, law environment. So we don't have time to wait when the law appear on the market and when we decide to do some investment decision. So a year ago, you asked us, why didn't you fulfill your promise from the strategy to be in a wind in a certain percentage because there is a law, regulations, etc., etc. So we fulfilled this. You know, you are asking us, why did you fulfill this requirement when you asked, probably you, a year ago. So what's the question? Is it good or bad from your position that we...
I wonder, because at that time you didn't want to buy anything, you didn't want to buy a cheap asset from the market that was trading, and yet you actually go ahead and talk about some risk on the horizon, that therefore you revise all of your strategy, and you didn't fulfill Opole, you didn't fulfill nuclear, you didn't fulfill offshore wind farms. I mean, this company didn't deliver on cost cutting, and all of these things were not fulfilled. And suddenly you fulfill just one acquisition at the time when you revise your overall outlook for the market. And that's why I wanted to understand what's the logic behind it. So if I can then tweak it into this strategy, maybe can you share your thoughts on your balance sheet? Because you don't pay the dividend, you run completely inefficient balance sheet, fully financed by equity. Are you going at some point to reach an optimal level, which you talk about, and then thinking about your strategy, what is your cost of capital you will assume going forward?
So, may I invite you in a couple weeks later, so there will be an occasion to clarify and to be more precise with your questions.
And I think that from other side, this moment it was a good moment from the price perspective, because of the situation on the market, as you know, that this is additional issue why.
Mm-hmm.
Now maybe question from internet viewer again. Roland Vetter from CF Partners asked us about hard coal. One of your competitors announced renegotiations of their hard coal contract. Could you please update on your negotiation progress, and do you expect any discount in hard coal price?
Maybe final price. Yeah?
We at this moment are under negotiation of the contract for this year. As you know, that we finished as we can say, mid-term contract, because it was for 3 years till the end of 2013, and we will negotiate a new contract for the next years, 14-15. but at this moment we are under a negotiation of the contract for Turkey.
It's not finalized yet.
And then your distribution business showed strong operating profit. Should we expect that the strong growth continues in 2013?
So it rather depends on the strategy taken by regulatory body, because almost, maybe not 100%, but most of the activity depends of our distribution depends on the tariffs setting up by the regulator. So there is no long-term strategy given to the market by regulator to prepare our strategy from the distribution point of view. So we negotiate permanently with regulator our tariff. So this is a very short-term business from this perspective.
Yeah, but from other side is the same. We have still this RAP, the revaluation, and probably in the nearest 2 years it should be better, but we can't confirm that it will be 30% as this year.
Do we have any questions on site?
Thank you for follow-up questions. I wanted to understand also the dynamics of your wage salaries across the group, because you managed to reduce the workforce significantly by 2,000 people. What's the year-on-year increase on the average salary? So I'm just trying to think what would be the effect if you reduce, let's say, a larger number of people. Will it be basically eaten away by cost inflation or increases of salaries?
I think that this is, you could probably roughly look to the history how it was, and this increase this year was close to, in the average, close to 5%. 2012, it means that's slightly lower than the decrease of the amount of people, close to 7% this year. And you know that we have the difficult agreements with trade unions and with our employees. And this moment we have to fulfill some of this, but from other side the same, we are considering what we should do with. To be frank, this increase should be offset with some, maybe some decrease in this year.
And because in Durów you said you optimized the plant specially, why is Bełchatów not requiring the same type of optimization that employs 11,000 people from top of my head, the mine and the power plant? Is there any significant potential for cost reduction in there? And then maybe last question to Mr. Kilian. There was a press articles that you met with a prime minister recently to discuss the nuclear project. I wonder if you could share, some thoughts, what could see the daylight with regard to what is the thinking of a government regarding the nuclear project. Do we still want to have it, not want to have it, or we kind of leave it as it was?
I still don't know if it was a private or public meeting in the Prime Minister's office. So it depends of my, it creates my situation a little bit complicated.
I read it in the paper, so I don't know.
But I'm not a journalist, so I didn't put anything to the newspaper. But of course, there was such a meeting, but I don't have any permission to share with anybody what was during this meeting. But of course, the meeting was devoting the general policy covering the energy sector and how to develop and how to modernize this situation and how to prepare the review of energy policy. Because the last discussion in government was taken in 2009, so it means 4 years passed. So the strategy is a little bit old, how to say, not valid, old-fashioned something like this, because everything changed on the market. But most of your questions touches strategy. So in few weeks, be patient, please. But taking back to the people and salaries, this is not an investment bank. This is not such an easy way, to optimize costs inside. For example, to closing down the investment banks like in Lehman Brothers, for example, and take your box and go on to the street, on the street, and find your new place. This is much more complicated. Of course, this is not an excuse. So I'm only trying to explain that this is not an easy and fast-going process. It needs a lot of time, patience, and agreement from both sides, because this is very complicated as well from the law settlement. So this is still ongoing process. We started talks with trade unions. We talk to everybody, every trade union. So we have in our group 112 trade unions. And we gathered all together a month ago with all the trade unions for the first time in the history of the group. Of course, this is not an achievement, but of course, this is not so easy to do anything inside the group without permission or agreement worked out with these people. So first, they should understand what we want to achieve. Next, they got the votes, they got the will to cooperate. In Turów, they cooperate with us. This is good information for the group, for the company, and for the market as well. And we would like to copy this solution to the rest part of the group, not only in Turów, but in Bełchatów as well, because this is our core assets from generation point of view. But more information in a few weeks. Thank you.
Regarding this first question, why Turów, not Bełchatów, I think that we did some first step last year when we talked about it, the whole efficiency. This moment we are going deeper. This moment the first stage is Turów. When we just finalize Turów, we will go to Bełchatów and other branches as well.
And now a question from Philip Gottschalk of Exane. Could you give us some reasons why the construction costs in Turów have turned out to be so much higher than initially expected? Do you think that costs could be reduced from the current bids?
To be frank, based on the Polish regulator, is this moment no possibility to change anything in this tender. Why the price is so high? I think that it should be the question to the bidders, to Hitachi and the Alstom as well, because this is the same our opinion that the price is almost the same as for the blocks, doubled as this in Turów.
Do we have, yes, Maciej?
Hello, Maciej Beliński, Pension Fund Executive. Just one question, quite specific one. Actually, in the fourth quarter, you recorded quite a big spike in renewable production. In fact, biomass co-combustion, it was close to 0.7 terawatt hour. And in the whole year, it was 1.5, so it was close to half of the annual production. Can you explain the reason, and should we, annualize this value for the whole 2013?
I think that probably you can't annualize. The issue was that it was quite profitable in fourth quarter, besides of the slightly lower prices of the certificate, but still enough for the good profitability from the co-combustion. I'm talking about the price of biomass and price of certificates, but we should say that this decrease of the prices of the green certificates at the beginning of the year shows that, for example, in Bełchatów it absolutely not make sense to do this because of the cheap fuel that you can't annualize.
So
it will be lower.
By which amount? What should we expect?
We will say about after first quarter. But I think that you can absolutely forget about Bełchatów in this case.
Do we have any other on-site questions? It seems we don't. We also don't have any internet viewers' questions. So thank you very much for your attention and hope to see you soon.